Good morning, good afternoon to those who are joining the webinar. We're going to give a few minutes for others to join, and we'll get started shortly. Thanks. All right, let's go ahead and get started. Welcome everyone to the Argentina-Texas Chamber of Commerce webinar series. Today's webinar is called Liquefied Natural Gas, or LNG, a Global Market Outlook. My name is Derek Wong. I'm a member of the Board of Directors of the Chamber, and I'm also the Senior Director of Planning and Government Relations for Accelerate Energy. Today, it's a real pleasure to welcome my friend and colleague, Oliver Simpson, as today's guest speaker. First, a few words about the Chamber. The Argentina-Texas Chamber of Commerce is an independent, nonprofit, voluntary membership association. It was founded in 2016 and has a goal and objective of promoting investment, trade, education, and networking opportunities between Texas and Argentina. The ATCC has its headquarters in Houston, where I'm located, and local chapters in Austin, Dallas, Buenos Aires, and Patagonia. We work through 5 sectoral committees, including energy and engineering, which organize this webinar. But we also have committees for innovation and technology, health and biotech, food and beverages, and our most recent committee, real estate. A little bit about Accelerate Energy. Accelerate Energy is the market leader in flexible LNG solutions. We have developed and operated 13 LNG terminals since the company's founding, including 2 import terminals in Argentina, in Escobar and Bahia Blanca. And now I'd like to introduce our guest speaker. Oliver Simpson is the Vice President for Commercial at Accelerate, and he joined Accelerate in 2014 and has over 15 years of experience in natural gas, LNG, and shipping. At Accelerate, Oliver leads the LNG and natural gas commercial business, as well as overseeing commercial LNG shipping activities. Before he joined Accelerate, Oliver helped set up the LNG chartering desk at Fernley's in Houston and London. And before that, he started his career at Total in London and then Houston in various commercial and trading positions. He graduated from St. Andrews University in Scotland with a master's in modern history, and is a real expert when it comes to LNG. So I think we're in for a treat. Before I turn it over to Oliver, I would like to recognize and thank the sponsors for this webinar. Our gold sponsors, Pan American Energy and King & Spalding, and our bronze sponsors, Practia, MHR Latam, and Pro Shale. And without further ado, I'd like to hand it over to Oliver for his presentation. We will have a time of Q&A afterwards, and so I'll be back to moderate that. Oliver, over to you.
Perfect. Thanks, Derek. Let me do my one little bit of technical here and try and share my screen. Make sure that are you seeing my screen now?
Yes.
Yes. Perfect. Okay. Well, yeah, Derek, thank you for the introduction, and thank you to the Chamber for the opportunity to speak today. I'm very happy to be able to give this presentation on the LNG market. I think it's obviously quite quite timely. There's quite a lot of interesting things happening in the market today. So the presentation here today, we'll have a brief look at Accelerate, followed by a look at, I added a short-term look at the market, what's going on, simply because I think it's very interesting to see what's going on in the short term in the context of the longer term, and then also look at some of the more long-term fundamentals in the LNG market. And hopefully we'll leave some time for some Q&A, because I'm sure there'll be lots of questions, and I'm always happy to take questions, and I think it's a good way of doing these presentations. So just a quick overview of Accelerate, which I think Derek you had touched upon, but so Accelerate, we currently have a global fleet of FSRUs operating from Argentina to Brazil to the US, Middle East, and all the way as far east as Bangladesh. It's truly a global span, and all very different markets, but essentially all of them using the same FSRU technology, which stands for floating storage and regasification units, which are, simply put, they are LNG carriers with the additional regasification technology on board, which allows us to come to deep water ports, connect, and with a connection to the local pipeline system, we're able to regasify the LNG and send it as natural gas to shore. Obviously, the big advantage of this technology is cost and time to market. And sorry, skipping my slides. Cost and time to market, and in places like Argentina, where when we started back in 2008, I think we were from the time of signing a contract to being in place, it was under 9 months. So that timeline on onshore facilities is closer to 4 or 5 years. So clearly it's a very advantageous technology, which and we've seen a rapid growth in this. So just looking at the market, as I mentioned, I think the idea is to start looking a little bit at what's going on in the market today, in the spot market that we're seeing today. We've had a few years of sort of say low LNG prices. Obviously, with the pandemic, we saw extreme lows on LNG, where we saw JKM and TTF in the 2020s trading around sort of $2, and today we've come to a point where they've traded up as high as $30-35. Just as a quick step back, just for the audience here, we've put 4 different price markers of Brent, JKM, TTF, and Henry Hub. 11% Brent is, generally speaking, what we view as the long-term price of LNG delivered into a market. Obviously, depending on the location of the market, that may be a little bit higher, a little bit lower, but it's a good gauge for long-term price of LNG. JKM is the Japan-Korea marker, which is an index that's run by Platts, which tries to track the physical price of LNG in Japan, Korea being the predominant markets, the most liquid LNG markets that there are. And so JKM is truly an LNG price. TTF is the Dutch gas trading hub, so that is a gas hub in Europe. So that is a gas price that you're seeing as opposed to LNG, and reflective of European and to a certain extent Atlantic LNG prices. And then you have Henry Hub, and here we've charted it as 115% of Henry Hub plus $2, and this is to show what is the long-term cost of liquefaction in the US. So you buy gas at Henry Hub, you liquefy it for about 15% of fuel, $2 is the cost of liquefying that. So you see, you see here the high spot prices, but you then start to have an idea of, the blue and the yellow line giving you a clearer idea of the long-term prices of LNG. I just also point out, obviously, the yellow line, as I mentioned, that's the cost of LNG liquefied in the US Gulf. So you still have to ship it, whereas the 11% Brent is more reflective of a delivered price. So you'd probably see, once you added shipping to that, you'd probably see those lines converge a lot more. So looking at what's driven these extremely high prices that we've seen in Europe and Asia, there's a number of factors. I mean, in LNG, people always like to talk about black swan events, but in my experience, as this market has grown more and more global, there's invariably black swans that appear everywhere. But I think specifically what's happened this year is we had a long winter 2021 in Europe, which led to storage levels being dropping to extreme lows after the winter, followed by a hot summer in Europe and Asia, which added to the LNG demand, combined with additional demand in South America, in particular in Brazil and in Argentina, where the FSRU came back into Bahia Blanca. And then there was a number of LNG supply disruptions across the chain. Personally, I believe some of them was obviously unplanned, but a lot of this was, I think, on the back of the pandemic, where people had planned for prolonged technical stops, and just some of the global supply chain issues we've seen, I think, have translated into some of the supply issues. And then we've had the issues in Europe with Russian pipeline flows, as well as flows from some of the Norwegian production fields as well. So, as of today, you see on the graph on the left, we're entering the winter, where we should be at our peak of storage, and we're well below our 5-year average. So I think that the market is obviously looking at this winter with a big concern onto what the flows will be from Russia, and ultimately what the weather will be like, which will determine the reality of the winter and the ultimate prices that we see. So looking a little bit at this year, both on the supply and the demand side, seeing where some of the new production and new demand has come from. The US has been the biggest changer on the export side. This has been a combination of new liquefaction trains that have come online, as well as last year we saw a lot of during the height of the COVID pandemic, we saw a lot of LNG plants shut in, where they simply it was uneconomical to liquefy the LNG, and so they shut down liquefaction and didn't send out the cargoes. So that's led to that dramatic change in production year over year. You've seen other places like Egypt, where we continue to see the rebound in production out of Egypt, which is in part Egypt, as well as the gas that flows from Israel, and then some of the other smaller gains in some of the other projects. Some of the big supply disruptions have been Norway, where the Hammerfest plant last year, which was about 4 million tons a year, which of LNG that largely goes to Europe, had a large fire towards the end of last year, and they're not expected back online before the end of this year. Trinidad and Nigeria both continue to have sort of long-term production issues, and I think we'll continue to see some decline out of those projects. On the import side, the biggest demand increase has come from China. That's largely unsurprising, and China has been the largest demand increase year on year for a number of years now. And you've seen some additional volumes from South Korea, in part due to switching away from coal. But probably the most notable one on this chart for me is Brazil, because when you consider the size of the Brazilian LNG market, this is a significant, to be up there against South Korea and China, which are two of the largest LNG import markets in the world, to suddenly be seeing their increase up there along them is quite impressive. Obviously, Brazil, which we'll touch on, has been largely a result of the hydro crisis that they have been facing. You've also seen, European markets have seen less imports. That's more a function of last year. Europe was acting as a sink for LNG in a low-priced environment. The easiest place to go and put LNG is in Europe, which has a large number of facilities and the ability to take on this LNG. So we've seen that diverted away this year to Far East and South American markets. And obviously the Argentina, this increase is largely from having the Bahia Blanca terminal back in operation this summer. So the Americas, as I touched upon, the Americas in general have imported more LNG this year. Argentina and Brazil have led that, but also Chile, the Dominican Republic, Jamaica and Puerto Rico have seen that increase. The largest increase, as mentioned, was in Brazil. You see on this bottom bar chart, you see the importance of hydro in the generation mix in Brazil. We unfortunately don't have updated information for 2021, but you see that hydro is 64% of total generation in Brazil, and we understand, earlier this year in the southeast part of Brazil, hydro production was down to 17% of production, where it accounts where 75% of the country's installed capacity is. And the LNG flows have increased fivefold this year. So clearly the LNG has been displacing hydro that hasn't been produced. And then in North America, LNG imports have reduced. I mean, there was quite high imports from the US to Mexico last year, but that has reduced as new pipeline capacity has been increased, taking natural gas from the US directly to Mexico. So specifically looking at US LNG exports, we believe that those will continue to grow. You see here on this top chart, as we had alluded to earlier, the result of the shut-ins last year. You saw a steep decline in production from the US facilities. That's come back this year together with the new facilities. There are two more projects, Sabine Pass Train 6 and Calcasieu coming online this winter, with further projects over the coming years. So we continue to see, US export capacity increase, and at 10 BCF a day, that's about 3 cargoes of LNG that are being produced in the US every day. Obviously, US LNG in the global market has, it's become the destination flexible LNG that really responds to the markets where it's needed, and we've seen that in the difference in flows from year to year. You see this year it's had a large flow to Asia Pacific, certainly versus last year. That's been predominantly where the volumes have gone. Europe has stayed strong, but you also see the significant increase in the Americas, which again, that's largely Brazil and Argentina, the driver there. And in fact, I believe I saw a news article this morning that in September, Brazil was the top destination for US LNG exports. So then trying to take a look a little further beyond at the market from to 2025 and beyond. We see a number of projects that are being discussed in the market. There's a lot of discussions on. There's a lot of SPAs that are being announced. A lot of these are linked to US liquefaction projects, and we've seen so far this year. It's been reported that there's been about just over 50 million tons of SPAs that have been signed for new projects. This has been a significant increase in recent years. Obviously, these SPAs are signed, but they remain subject to the FID of the project. So we'll have to see whether some of these projects ultimately do take FID. But it's a clear sign of commitment from the buyers to take volumes. A lot of these, as mentioned, a lot of these volumes are coming from companies in the US, with Cheniere, Venture Global, and Tellurian being probably the main drivers of this. And we're seeing that a lot of the buyers of these, we've seen a lot of Chinese buyers. Asian end buyers, but in particular Chinese buyers, as well as portfolio players and traders who decided to take on US-based positions that they believe they can trade into either Europe or Asia. As I mentioned, the US volumes are truly flexible LNG, which with Panama, you have a pretty easy access to the Far East, as well as access to the European markets. However, on the FID side, it's fair to say that since COVID began, we've only seen 2 projects take FID, and really it's only one. It's Sempra's ECA project in Mexico, but also the Qataris have effectively taken FID on their North Field expansion. The Qatari expansion is 33. Over 30 million tons of additional liquefaction capacity coming online. So I think when you look at the new projects between the US and Qatar, you have 2 of the biggest the biggest sources of LNG to come online will be from those 2 markets. We've been expecting a number of additional FIDs this year. Projects like Tellurian, Venture Global's expansion have all been expected. I think certainly the spot market is helping, but at the same time, I believe there are some challenges to these FIDs. We're in a world where there's a lot of questions on the transition, on the role of fossil fuels. That's clearly having an impact from a financing point of view on these projects. And what we've seen out of the US too recently, Tellurian has come up with some of the first long-term market-linked LNG SPAs, where they've sold LNG on a blend of TTF and JKM. Obviously, when you look at today's spot prices, that looks very attractive, but it remains to be seen whether financiers can get comfortable with that kind of pricing, as opposed to the more traditional pricing in the US, which has been the Henry Hub plus the tolling fee. So I think there's certainly some challenges on FIDs going forward, but as I say, there seems to be there's an interest and people are signing up for SPAs. So yeah, more specifically looking at some of this capacity that's still to come online over the next couple of years, you have between 20 and 30 million tons of under construction capacity coming on per year between now and 2025. Also in 2026, you start to get the Qatari expansion. So that's another 30 plus million tons coming online. So there is a large amount under construction. Some of that construction, some of the projects like Mozambique may face some delays, but a large amount of that is, US, as well as some of the Russian expansion, and we expect it to be largely on time. It's fair to say that the projects that are planning FID, that is this large chunk in 2025. Realistically, we would expect that to be spread out more over 25, 26, 27 as the reality of when the projects take the final FID decision comes into play. But there's clearly plenty more projects out there. It's fair to say a lot of these projects are US based. I mean, it's US LNG continues to be some of the cheapest LNG that long term that there is out there. When everything is taken into consideration, from the politics, the ability to construct the project, the ability to finance, it's certainly US LNG is very attractive from that point of view. So there's, I think, our view is that there is a healthy supply of LNG coming online over the next 5 years. Certainly we'll need a few more FIDs, I think, to meet some of the demand. But especially with the Qatari expansion in 26, we see a market that continues to have more LNG supply coming online. On the regas side, there's a sort of rule of thumb in LNG that for every million tons of supply, you need about 2 million tons of regas capacity. The global regasification capacity is about double that of the LNG liquefaction capacity. So obviously, you'll see these numbers are significantly higher. A lot of these projects are based in Asia, and I think a number of them in China. But obviously, this is also where we see some of the FSRU regas projects that can come in at short notice and take quick FIDs and have a short construction time. For an LNG liquefaction project, you're looking at from FID. Certainly, a US project is probably more likely 4 years of construction time. On the regas side, for an FSRU project, an 18 to 24 month timeline is certainly achievable. So I think you've seen a lot of interest from some of these developing markets to bring in more LNG. I think some of the challenges of the spot prices today has put some of that in question. And there's no doubt that from where we sit as Accelerate for opening up new markets, having these high prices is not advantageous. But at the same time, as I mentioned, you're still seeing that the fundamentals and the price curves for long-term LNG still remain very attractive. So the markets that are able to plan, can still get attractively priced LNG. And certainly you look at markets like Bangladesh and Pakistan that have come online the last few years. They have all signed long-term contracts where they've been importing at 10 to 11% of Brent, and so they have been largely shielded from some of these excessive spot prices. Albeit, when suddenly one of these countries is buying even if it's one cargo out of 10 that they're buying on the spot, it still has a significant impact at these prices that we're seeing. But the other thing that we're seeing in general across the world is the need for LNG solutions as flexible solutions, where a lot of markets have seasonality issues, where traditional domestic production is declining, and so LNG can provide a security to that as these markets look to transition to renewables, I think we see that LNG continues to play a role in that. Ultimately, what that does for LNG is as we have more LNG supply outlets, I think it continues to drive the volatility of the markets, which is, for example, what we've seen this year, where you have markets like, to some extent, Argentina and Brazil that come on, and suddenly between them take 8 million tons of LNG in just in 1 year. That's a big swing for the market to suddenly take year on year. But I believe that's a trend that we will continue to see. And I think that's the end of that for now. So we jumped around a bit, and as I say, I'm very happy to take questions and answer any specific questions.
Thank you, Oliver, for that presentation, for taking us through sort of the current pricing volatility and a bit more of a long-term outlook. We will start now a time of Q&A. So if you'd like to ask a question, please place it into the Q&A button within Zoom, and I'll be happy to pass those questions to Oliver. Oliver, if I may, I'm going to start off with a question. You alluded to LNG as part of energy transition. If you read the headlines right now, most of the world's leaders are in Scotland, in Glasgow for COP26, and there have been a lot of statements about the need to get to net zero, to reduce emissions, to increase renewables. Can you talk a little bit about your view of sort of LNG's role in that process and what we're seeing in markets where Accelerate operates?
Yeah, no, absolutely. And yeah, I think it's a very relevant question. And honestly, I personally believe that some of what we've seen in the spot market today in terms of these high LNG prices is the transition happening in reality. It's Europe moving away from coal. It's China moving away from coal. And as they look to the immediate solutions, LNG is the obvious one. And I think we've seen that as I say, we've seen that in the spot market. I think it's quite clear that LNG plays a role, and it's interesting to see that the rhetoric on LNG has, there's always been this, as we talked about the transition and the bridge, and I think people said we don't want to have a bridge, we want to go straight to renewables. But I think some of what we're seeing today is helping to bring the discussion to the role, how we achieve the transition, and in that the role that LNG can play. I mean, I think that what's quite clear is the more aggressive we are in the transition, the more volatility we're going to see in energy markets. Renewables continue to have big unanswered questions with them. I think I want to be clear. I'm not a fossil fuel dinosaur. We're going to get there, but the faster we try to get there, the more challenges we're going to have. So I think LNG can absolutely play a role because it's flexible supply that you can bring to markets. And that's, I think, what we've seen in our business is that we can go to markets and say, we're a floating asset that ultimately, if you achieve your transition, we're happy to move on. But there is still a lot of, I believe globally, there's still a lot of coal that needs to be displaced. There's also still a lot of electrification that has to happen, and across Africa, across Asia. So there's a lot of good that LNG can achieve, and I think I've read the stat that if all the coal generation in the world switched to LNG, we'd achieve the COP26 goals. And so I think LNG can be an easy victory, but it is obviously a very political discussion, and then we'll have to see how politicians ultimately want to embrace LNG. But I think, and you see, I personally believe that with the US too, the role that the US can play with a strong LNG export policy. I think US LNG can do great things in some of these developing countries.
Great, thank you. The next question comes from Pablo Rueda, who leads the Buenos Aires chapter of the chamber. His question is, assuming Argentina resolves its macroeconomic problems, is there a place for Argentina in the future of the global LNG market? Is it seasonal?
Well, it's interesting. Whether the place is an importer of LNG or an exporter of LNG, but I think the reality is that actually Argentina has a place in both, and I think that's the way to think of LNG. It is ultimately very flexible, and I think absolutely there can be a role for Argentina in the export of LNG. As I say, I believe there's still plenty more LNG that's needed. So certainly I see them having a role. It can be a seasonal role where, Argentina you have a counter-seasonal issue, or not issue. It's actually a benefit with Argentina, where the Argentinian winter is during the generally lower demand. In the global LNG market, the highest demand is the Asian winter, which is Northern Hemisphere winter, and so I think with Argentina's own needs in their winter, there's an interesting possibility for seasonal exports. I mean, I think we saw that a couple of years ago. I think some of the market dynamics that happened were unfortunate, but I think there continues to be something there.
Great, thank you. Just one note, if the Q&A function is not working for you within Zoom, you can also send your questions in via the chat function, and I can get those questions to Oliver. The next question comes from Marcelo. He asks about power generation equipment, that a lot of gas-fired power generation equipment is being, quote unquote, funneled to Brazil due to the drought and potential power shortages. The question then is, will there be enough supply of gas, and will it be at a price sustainable for the power generation industry?
Yeah, I mean, I think, if you recall the first slide with the forward prices of LNG, I think we're in a bit of a pinch this winter, but we are suddenly expecting the market to normalize in 2022 to a certain extent, but certainly by 2023, we should be back to a more balanced market. So I think there are solutions that are there, and also I think the key thing, as I mentioned, is that you see that long-term, even mid-term pricing is still relatively quite attractive. So I think, depending how people approach the LNG market, I mean, if you have very uncertain demand and you need a lot of flexibility, that's the challenge. You're going to be exposed to spot prices. But if you have more stable demand, I think there is some, more attractive long-term prices out there.
Great. You mentioned earlier in your presentation that in the last year, Europe was sort of a sink for LNG. A lot of cargoes were sent there because of the facilities that they have, more storage that they have for natural gas. Can you comment a little bit about sort of energy storage as it relates to LNG, FSRUs versus sort of onshore storage for countries who are facing gas deficits?
Yeah, I mean, I think obviously, Europe has large onshore, regas capacity, which, as I say, they're able to build up their storage for the winter. That's been planned over many years, and when the market came off, it was also they had the ability to take more LNG, turn back pipeline gas. It's a pretty developed market. Certainly, I think that what you see through the FSRU space is the ability of LNG as a peaking fuel. One of these LNG vessels can hold about 3 BCF of gas on board, which is a significant amount. And you can, I think, if I'm not mistaken, that gives you about that can fuel about 5 gigawatts of generation capacity for a period of 6-7 days. So that's a huge amount of storage right there, which for a lot of countries is more than they'd ever need. So I think you can build LNG storage to complement, especially to economies that are moving towards renewables, that can complement renewables and intermittency in the system. And I think that's something that we'll continue to see going forward as an appealing tool for these markets.
Great, thanks. The next question comes from Nicolas, and I think it's a reference to the earlier part of your presentation. Gas prices went as far as $50 per MMBTU. What kind of volatility in prices could be seen this winter? Do you see prices going up as high again or even more?
So for me, I guess I'd probably say I was personally surprised to see the prices go up so high before the winter. I would have probably, something like that, I would expect to be a true physical crunch in real time, because this was, forward prices. I think the reality of this winter, as I say, to me, it's two things. It's Russian flows and weather, and probably Russian flows will be impacted by weather, because if you see cold weather, you may see less flowing to Europe as Russia keeps the gas for itself. But that's clearly, I think, what would push the market back up to these levels is if Europe has to buy LNG. I think if Europe is happy with the volumes they have and call it more traditional volumes of LNG coming through, I don't think that Asia by itself pushes prices to $50. But if you start seeing Europe saying that it absolutely needs LNG, then I think in some ways we've kind of already proven that the sky's the limit. There is, we went through $30, $40 without any issue, and I think that sort of and we also had last year where we had $40 LNG in the Far East. So but the bottom line too is that I also believe that these prices are, I don't think they're sustainable for a long period of time. And you've seen these prices that we're seeing now, even at $30. I mean, in context, it's equivalent to about just under $200 a barrel oil. And so far we've got through this. We haven't heard of the big losers, but I just don't see how players can continue to pay those prices for LNG. So I think the outcomes of this winter are suddenly going to be very interesting.
Yep, absolutely. We do have an additional question from Pablo. Is the global market moving to spot contracts or long-term contracts? What kind of trends are you seeing?
That's a great question. I mean, I think we were seeing the market move more and more towards spot contract, and I think that there was a big push for that. But now, with some of what's happened, I think some of these markets have realized that the long-term contracts are much more the stability that comes with long-term contracts. Because, as I say, I mean, you've probably got 70% of the market that is paying either long-term Henry Hub or sort of some kind of oil index at the moment, and about 30% that is buying spot. And I think that the volatility of spot has probably got people questioning the value of going towards a true spot market. And I think as linked to the whole transition, I think the volatility is clearly here to stay. So I think you're seeing people question again the need for whether we really want to move to spot, or whether LNG is a sort of security of supply, which you contract long term. And the reality, my personal opinion is, it's ultimately, I think, going to be a balance. And some markets where you've got renewable energy and you don't know when you're going to need gas, they're going to have to take that spot exposure, and that's going to come with the volatility. But for any of these markets that are switching from baseload coal to baseload gas, personally, I think it's madness not to go to long term. I mean, it's so much more, so much more beneficial.
Yeah. Just checking on time. I think we have time for a couple more questions. I know that there's been a lot of interest from the audience. One other question from me, Oliver. If you look at the chamber, our mission is to increase links, whether it's commercial, education, cultural, between Texas and Argentina. Accelerate is a Texas headquartered country that has been operating in Argentina since 2008, and we have a local team and local fleet in country. Can you talk about a little bit about sort of strengthening those ties, or the experience of Accelerate operating in Argentina since you've been with the company?
Yeah, no, I mean, absolutely. I think, I mean, as you mentioned, with the two FSRUs that we've had in Argentina as Accelerate, I mean, I think we're extremely proud of those two assets and the service they've provided over the last 10 plus years. I know that, it's especially Bahia Blanca is the first one, and Escobar is the second one. They're both, they were key markets that helped Accelerate in some ways, well, not in some ways, that helped Accelerate prove its technology, prove itself. And so the growth, the growth of that market in Argentina, we grew side by side on that. And I think, I certainly remember in the early years before my time in Accelerate, when the FSRUs were first put into Argentina, and there was a lot of question marks as to the technology and ship-to-ship transfer. And I think now you see how when the Argentinian gas tenders come out, and you have the whole market that is interested and ready to participate. So I think that's been great. And more broadly beyond Accelerate, I think I don't have the statistics at hand, but you see the amount of US LNG, much of which I assume is coming, it's at least being liquefied in Texas, if not produced as gas in Texas, making its way to Argentina. There is very much, I think more than ever, on the energy side, there is a very direct link between Texas and Argentina these days.
Great. Thanks so much, Oliver. I think that is going to wrap up the Q&A for today. Just want to thank you again for spending your time with us at the Chamber for this webinar series. Lots of great insights on the global LNG market, and both short-term and long-term. I would like to thank our sponsors once again, our gold sponsors, Pan American Energy and King & Spalding, as well as our bronze sponsors, Practia, ProShale, and MHR Latam. For those of you who are not members of the Chamber, I would invite you to join us. It's a fairly easy membership process. And I'd also like to preview the next Chamber event, which is an in-person event in Houston. It's the Chamber's 5th anniversary cocktail on November 17th. Our special guest will be Jorge Arguello, Argentina's ambassador to the United States. Admission is free for members, $50 for non-members, so all the more reason to join the Chamber ahead of the event. And with that, I'll thank everyone again for joining. Thank you for the great questions and the conversation. Thanks again to Oliver Simpson for being our guest speaker. And we'll see you at the next event. Thanks, everyone.
Thank you.